Anxiety overtook investors Monday, the first day of trading since Standard & Poor's downgraded the government's debt.
But it was much more brutal than we thought.
Brutal may be understating it. The Dow Industrials average fell 635 points, the worst one-day drop since December 2008, and the sixth worst in the last 112 years.
From a psychological point of view, we've been above 11,000 now for quite a long time. To break that, if you look at the trader's point of view, it's very light on the way down. There's no support till you get to like 10.5. So this market could possibly sell off tomorrow.
President Obama tried to reassure investors that despite the downgrade from AAA to AA+, the U.S.'s credit rating is still top-notch.
After witnessing a month of wrangling over raising the debt ceiling, they doubted our political system's ability to act. The markets, on the other hand, continue to believe our credit status is AAA.
Judging by the drop in the market, during his speech, investors were having none of it.
I think as long as the government keeps trying to send a message that everything's all right, the investment community is wise to that routine, and they're not going to buy into it anymore.
Investors desperately look for safe havens to put their money in and settled on U.S. government debt, even though it was the target of the downgrade Friday.
It's a safe haven. It's a safe haven. It's typical. People flood to a very safe investment tool when there's not a lot of credibility in the other asset classes.
Gold is seen as another safe haven. It set a record, rising more than $61 to settle at $1,713 an ounce. At the end of the trading session, the Dow was down 635 points, 5.5% to 10,810. The Standard & Poor's 500 index fared worse, down 80 points or 6.7% at 1,119. And the Nasdaq Composite Index fell even further, down 175 points, 6.9% to 2,358. Mark Hamrick, Associated Press.